There's a hidden flaw in the way most of us track our investments. It's a comfortable little lie that makes us feel safe when really we should be taking action. Today, we're going to pull back the curtain on something called the blended average trap.
Just read this quote for a second. This right here, it highlights a critical danger. That single green number you see for a stock in your portfolio, well, it might be masking a really serious problem, basically encouraging you to do nothing when you should be selling. It's a false sense of security. And today, we're going to show you how to see the truth. So what exactly is this trap? Well, it's a fundamental design flaw in pretty much every portfolio tracker out there. They take all your purchases of a single stock, maybe some you bought on XIRR last year and some on Grow this year, and they just blend them into one single misleading average. And look, this isn't some minor quirk. It completely undermines your ability to manage risk effectively. Okay, this slide just lays it all out perfectly. On the left, you see the illusion. A nice, smooth, comfortable plus 65% blended gain. Looks fantastic, right? But the reality, over on the right, is way messier. It shows that this great investment is actually made up of multiple entries. One entry via ShareCon is doing incredibly well, up 135%. But another entry, through Grow, is down over 5%. That position has hit its stop loss and it needs immediate attention. The blended average doesn't just simplify the picture, it hides the most critical piece of information you need to make a decision. Let's make this totally concrete with a real-world example using Titan. So imagine you own 2 lots. You bought the first via XIRR at $3,350. Later, you added more via Grow at a better price, $2,800. The current price is $3,100. Now, your standard portfolio tracker, it's going to show you a blended profit of 3.33%. It's green, no alarms are ringing. But look at the reality. Your XIRR position, that first entry, is actually down 7.5%, well past a typical stop loss. That is a clear signal to exit that specific trade. But this urgent signal is completely canceled out by the 10.7% gain from your Grow position. The blended average is telling you to chill out when you should be disciplined. So how do you escape this trap? Well, the solution is actually pretty simple in concept. Stop blending and start isolating. And this is exactly where the FinMagine Portfolio Manager comes in. Its whole idea is to treat every single purchase you make on every single broker as its own unique investment. And here's what that solution looks like in practice. Just look at the Holdings tab. Instead of one line for Titan, you might see a few. You've got separate columns for each major Indian broker. So if you hold the stock in both XIRR and Grow, you see 2 distinct P&L numbers, each with its own cost basis and performance. A losing position has absolutely nowhere to hide. And the system doesn't just sit there and show you the truth. It actively alerts you when something is wrong. Any position that breaches your preset stop loss immediately triggers this little red badge on the extension icon. You get a visible, unmissable signal that you need to take action, even before you open your portfolio. It's like having a silent guardian for your risk management, always on watch. The whole system makes this incredibly intuitive with a simple color code. Dark red is an immediate call to action. Your stop loss is breached, it's a clear exit signal. Orange is your warning. You're getting close to your stop loss, so pay attention. Simple red means you're in a loss, but you're still within your tolerance. And green, above a positive 5%, means the position is healthy and you're fully committed. With just a single glance, you can assess the true health of every single one of your trades. Now, this newfound clarity isn't just about avoiding losses. It's about building a much better investment process. It actually enables a whole new level of portfolio discipline, helping you manage how you allocate your capital systematically. So this clarity lets you create a simple but really powerful 3-tab workflow for managing your portfolio. First, you've got the Allotted tab. This shows you your clear winners. These are the stocks where every single entry you've made is up more than 5%. These are your fully committed positions. Second, the Consider tab highlights stocks where your total investment is below a threshold you define, let's say 3 lakh rupees. It forces you to ask, am I under-allocated to my best ideas? And third, the Add More tab. It identifies stocks where you have some, but not all entries in that green zone. It points out exactly where you might have room to carefully average up. It's basically a built-in framework for smarter position sizing. But look, true portfolio clarity goes even deeper than just isolating P&L. It also means understanding 2 other critical numbers. What's your actual cost, and what's the true speed of your returns? Your buy price is never your real cost. This brokerage fee engine calculates your true all-in cost per share. It meticulously adds every single statutory charge: STT, exchange fees, stamp duty, SEBI fees, GST, the whole shebang. It even understands the specific fee structures for different brokers, whether it's a zero brokerage firm like Zeruda or a traditional one like ICICI Direct. This means your stop loss isn't based on some fantasy number. It's tracked against your actual break-even price. It's obsessive accuracy by design. Okay, next, let's talk about velocity. Your P&L percentage tells you how much your money has grown. That's useful, of course, but it's only half the story. XIRR, or Extended Internal Rate of Return, tells you how fast it's growing. Think of it like this. P&L is the distance you've traveled, while XIRR is your speed. It annualizes your return, which lets you compare every investment on an equal footing no matter how long you've held it. And this is exactly why XIRR is such a game-changing metric. Just look at this example. A 35% return on a position held for 5 years, it looks great in simple P&L terms, right? But its annualized return, its XIRR, is just 6.1%. Your money is working really slowly. Now compare that to a 25% return that you achieved in just 6 months. The P&L is lower, but its XIRR is an incredible 45.3%. That's rapid compounding. See, simple P&L can trick you into holding these slow-moving assets, while XIRR highlights where your capital is truly working hardest for you. But this tool isn't just about tracking what you already own. It's built to be a complete command center for your entire investment world, from your initial research all the way to a unified global overview. The watch list tab, for instance, isn't just a list. It's basically a powerful built-in research terminal. It pulls in 23 columns of deep fundamental and technical data. You can compare PE ratios, return on capital employed, and even see technical signals from platforms like Chart Inc., all in one place. It lets you directly compare your current holdings against any new idea on the metrics that matter the most to you. And we all know that in today's market, investing is a global game. That's why this isn't limited to just Indian stocks. It's designed to manage your entire financial life, supporting 4 key asset classes: Indian equities, global equities for markets like the US, Indian mutual funds, and global funds and ETFs. And here's where the real magic happens, in its seamless normalization. As you can see here, it takes all your different assets, a US-listed ETF like VOO, an Indian mutual fund, and your NSE holdings, and it automatically converts their value into Indian rupees using an FX rate you can define. This means for the first time, you can see the true value of your entire global portfolio in a single unified view. No more mental math or switching between apps. It's a genuine apples-to-apples comparison of everything you own. All right, let's talk about something that is absolutely non-negotiable when it comes to your money: data, privacy, and security. And this is all possible because of its architecture. FinMagine is built on a 100% local-first principle. Look at the diagram. All your data is stored directly on your machine in what's called chrome.storage.local. It never, ever gets uploaded to an external server. Your trades, your holdings, your settings, everything lives only on your computer. Let me be super clear. Your financial data stays yours and yours alone. Period. Look, this tool is designed to replace guesswork with clarity and bad habits with discipline. If you're ready to escape the blended average trap and take true command of your investments, you can install the FinMagine Portfolio Manager directly from the Chrome Web Store. So I'll just leave you with this question. Those comfortable green numbers in your current portfolio tracker, what are they really hiding? Now that you know about the blended average trap, what are you going to uncover in your own portfolio? A hidden loss? A slow compounding investment that's just tying up your capital? There's only one way to find out. Thanks for joining us.